You know him as the third richest person in the world. He has earned the nickname the Oracle Omaha because he's a beast when it comes to investing.
Today we're talking about Warren Buffett. We'll dig into his strategy and how you can use it to trade just like him.
Yes.
What's up, people? It's Nadia
And Nicole,
bringing you another installment of the Wealth Twins Show,
where we give you the best tips, tricks, and inside scoop on how to build your wealth on your road to financial independence.
And what does that mean, Nicole?
It means we're trying to make work optional for you.
Fire your boss.
Yes.
So if you like what we're doing here, make sure you hit that subscribe button and that notification bell that will show up right after to know when we're releasing our new videos.
We release them weekly, but if you want to be the first to know, you have to hit that notification bell.
So what is the strategy Warren Buffett uses, and more importantly, how does he make so much money?
Well, his strategy is pretty easy. How he makes so much money is a different thing. But the strategy he practices is a strategy called long-term investing, which he learned from his mentor, Ben Graham, while he was a student at Columbia University.
Roar, lions, roar.
Okay, in case you didn't know, Nadia and I both went to Columbia as
That's our
undergrads.
alma mater.
Yes.
See you. Stand up.
Oh, boy. Anyway, Benjamin Graham was a professor at Columbia. He also was an investor, and he wrote one of the most important investing books.
If you don't know what that book is, it's called The Intelligent Investor. If you're really serious about investing, you need to read this book.
Or if you need some sleep at night and you want a good night's sleep, read the book. It's definitely an important read, but it is long and it could be hard in some points.
So if you don't want to do that, make sure you just check into the Wealth Twins and we'll break everything down.
Yeah, we're going to
for you.
summarize the whole book for you, okay?
All right, Nicole, so what is value investing?
Okay, value investing is when you decide to buy a company's stock based on a mismatch between the stock price and the intrinsic value of the company.
All right, so let's put that in other words. It's a stock price versus actually building or creating that company from scratch, like including the furniture, like if you wanted to do everything.
Like how much would it cost you to actually create a company or buy the actual company?
Yeah.
That's the intrinsic value of a company. And so you say if the company is, $100 million in terms of you had to build it, and you could do the stock price versus that, you'll find out if the company is trading cheap or is expensive in terms of stock price.
So what's commonly used to value the company are the assets, liabilities, and the cash that company has on hand. You'll find a lot of this information in three major company documentation, which is the income statement, the balance sheet, and the cash flow statement.
Yes. Value investors tend to believe that the market overreacts sometimes based on news or any other things, and therefore there are stocks that get priced incorrectly because of it. Warren and others believe that if he does his analysis right, he's able to find great stocks which he believes will be on sale. He then buys them and then waits for them to go up in price before the market realizes his mistake.
Yeah, this is how he catches things that are on sale that people are just missing out because they're like, oh, the news is crazy. But he's looking for those things that here's a good value.
Yeah.
Okay.
He doesn't base his decision on the economy because he believes there's a company, a good value company in any economic situation. And he's been doing this for decades.
Yeah, he only believes in buys companies that he believes will stay for a long time, and he believes that can weather any economic storm.
And he does that based on his financial analysis, the fundamental analysis of the company. He doesn't do it based on what you and I think. He really treats companies like he does what you would do a person, Say you had two people that are asking for a loan. With that, you might say, this guy seems good, but this other guy, he might not seem good when you're talking to him. But when you look actually on paper, his different situation, his potential to earn money later on, number two might be a better person to lend money to. And that's basically what Warren is doing when it comes to stocks.
Yeah, is how well that person is managing their money. He's just thinking in terms of companies.
And he's not thinking that because today's Tuesday, I'm only going to deal with this person versus that. No, he digs deeper.
Yeah.
So,
Well, value investing. It's not a day-to-day trading strategy, right? He doesn't keep looking at the stock like, oh, what's going up and down, right? It's based on the decision of long-term thoughts, right? Why would he make himself go crazy checking them every day? We don't do that. You do it?
He tends to buy a company that he believes he's going to keep for a long time. He makes a decision, and then he moves on.
Yep.
Okay.
He only buys and sells companies that he understands. He calls this a sphere of competence. If you can't understand the business model and how the company makes money in the long term, then he won't buy it at all.
He's famous for not owning Amazon and many other tech companies. He does own Apple, but there's many tech companies that he does not own.
So what does his company actually hold?
So his company is actually called Berkshire Hathaway. And the companies that they own is actually the public companies that they own. You can actually find out by just Googling. So you'll find out the companies that Warren is publicly buying and what Berkshire Hathaway is buying with the Berkshire Hathaway portfolio tracker, which you can find on Google.
Yeah. So when you know value investing, it's one of the many strategies you can learn to invest. Although it might sound straightforward, this strategy isn't as basic as doing analysis on a company's cash flow data.
And it won't just make you rich by doing this. You want to be like Warren Buffett, but if everyone was to try to be like Warren Buffett, there'll be more Warren Buffett out there. When it comes to Warren, he does a great job of finding needles in haystacks.
Yep.
He happens to be so good at investigating and digging deep into the numbers just to find investing opportunities. Now, I'm not saying, and we're not saying there can't be another Warren Buffett out there.
Yeah.
Maybe you'll get into value investing, and you could see that it seems easy to you, and you can try it yourself. But it's not as easy as it sounds, okay?
Yeah, we believe there's an easier way to pick stocks, which is based on dividends and the potential for high dividends, which we get into in our Royal Dividend Stock video.
Make sure you check out that video. We'll
Yeah.
have a link to it above.
Yeah.
So, if you would like to learn more about value investing or how to do basic, financial analysis of companies using those 3 documents, the income statement, the balance sheet, and also the cash flow statement, let us know. We'll love to tell you about it.
Yeah, and on top of this, tell us what you think in the comments too. Do you think you can trade like Warren Buffett? Or if you have read The Intelligent Investor,
Tell us what you think about it.
Yeah.
We'll love to hear your thoughts.
and you don't necessarily have to buy the books that we're talking about. You can also go to the library, but if you're interested in buying the books, we'll have those links down at the bottom.
Yeah, and we'll love to hear what you guys think. So, with anything, thank you for watching this one. And remember, your manners will always take you further than your money.
Yep. See you in the next video.